Alright, in the last session we discussed the various day types, but we discussed them in isolation to get a deeper understanding of what each was like. Now we're jumping right into the charts to put them into context. And so the first step in doing that is to realize that based on that law that previous market behavior affects current behavior, the current day type that's about to unfold is sometimes affected by the day that came before it. And this is especially the case when we're looking at trend days. So here on your chart you see that there was a large trending day right here, right? The market gapped up, already up a few points, trended up, had a small balance here, and then just shot higher all afternoon and closed at its high. So opened on one extreme, closed on the other extreme. Well, one of the first things you should know to put day types into context is that after days like these that are so directional in movement, we often get balancing days after them. Now, I'm saying balancing day in general. I'm not going to say if it's like a neutral day or a normal variation day. That doesn't really matter. At this point, we're just talking about the broader picture. And the broader picture is that after major directional moves take place in one day, in terms of a trend day, you usually get some sort of a balancing day after. Now, don't take that to mean it's always going to be a pure sideways day. Sometimes it'll be, an upward trending, drifting up day or a drifting down day. In rare cases, you'll have two trend days in a row. That's in the case of a very strong market trend. So these aren't absolutes, but again, we always look at what's common, what happens most of the time, right? That's how you analyze markets, and that's how eventually you'll have an edge in the markets when you're trading them. So that's one thing to note, is that once you have major directional moves, the following day is often a balancing day. Will usually push more into the direction of the previous day, but then we get overextended and we meet, in this case, sellers, which we're going to push it back down and balance it. It just takes time to digest this kind of strong move one way or another. And this leads me into another principle when putting day types into context. So assume when we shot up here, right? Assume this was a resistance area right here. Okay? And we just shot up through it slightly the day before, and now this day we opened and continued higher. So this is bullish market behavior. And looking at it on its own, you might think, oh, we just had a very strong bullish day the day before. Now we're opening and shooting up through resistance. So this thing should just probably just keep going higher and higher. So let me jump on board on the long side. Or let me think that the market's just gonna shoot straight up. But if you look at things in context, you realize, okay, wait, the day before was a massive up day with strong directional conviction. More than likely, the common thing is that prices are going to rest. Even though we just shot up through resistance, we're more likely to balance around it and then later, as in the following day or days, shoot up through it, right? And this is very important when you start day trading the markets. Just because the bigger picture is doing something, it does not mean that whatever you expect to happen will happen that day. That's something that day traders get into trouble a lot with. It's not just knowing about the general direction of the markets, it's knowing how to time when they're likely to make their movements. Day types help us time that. If we know, for instance, that the previous day was a major uptrend and the likelihood is balanced, we're not going to expect today to be the day that we get really long and shoot higher. Maybe we expect it'll be the next day, for instance. Now, the next thing we also have to think about is not just, for instance, the previous day, but what's the general context. So let's take a look at that. Okay, here we are in a different scenario. Let's assume you're trading this day, and let's assume that you're at this point in time right here. Okay, you see that the day opened here, drove down, set up the initial first hour range, and then broke it to the downside, and now it's breaking it again to the downside. Alright, so this is looking like it's likely going to be a normal variation day to the downside. But that's not what ended up happening. It ended up reversing and then eventually ended up taking out the high of the day and forming a neutral day. Now, is there any way we could have known that that could have been likely to happen based on context, right? Now we're not looking at day type in isolation and just labeling it after the fact. We're assuming we're trading it during that day, and we're trying to figure out what kind of day it's likely to be. What context affects the day type. And so let's zoom out a bit and see how this took place. Okay, I've zoomed out to what was happening before that day took place. I'll show you the day in a sec. So here we were pretty much moving sideways, balancing. We tried to break down out of this whole sideways area here, but the next day we just rejected it completely to the upside with a massive gap. And not only that, we kept shooting straight up right off the open, an open drive and with high conviction, and kept trending most of the day. So it ended up being a trend day to the upside that gapped through the whole previous balance area, took it out to the upside above resistance, and just flew higher, right? So now this is the day in question, right? This is the day that we were analyzing, where the market opened here, looked like it was going to break down, then reversed higher. Looking at it in isolation, we could have labeled it at the end of the day. But trading it intraday and looking at it in context, you could have had a heads up of the potential type of day it was going to be like. Because by the time it got here, right, and it was looking like it was breaking down here, the sellers were pushing it through the first hour range. Where was it hitting? Well, it was hitting a key reference area. It was hitting the previous high of this balance, the previous resistance, and it was hitting the area where a lot of directional conviction took place off of the huge gap, the place where buyers were quickly rejecting these prices and moving it higher. And so we know that previous resistance becomes support. We know here that the context is we just rejected this whole balance area to the upside with strong conviction. We know the likelihood, based on all of this behavior, is that higher prices are likely to come, right? And we know that during this day, as we were pushing down, we weren't doing so with massive conviction. We pushed down, then we had a nice big bounce higher, then we pushed down, we kind of went sideways. So the conviction wasn't very high to the downside. Given that, coming in the context of this previous bullish behavior meeting this key reference area, this was a pretty good odds point that we were likely to reverse from here. Now, it wasn't saying that we'd necessarily hit new highs, but it was saying that we were not likely to have a downtrend day, for one, and we were not very likely to keep extending the range lower, for two. And three, it was saying that despite this looking like a normal variation day, there was a very real possibility that the high of the day would be taken out. And so all of this we got from context. And we were able to decipher the likely day type, or at least avoid making some mistakes of thinking this could be a certain type of day versus another. And this we got from context. Okay, here's another example of how context and important key reference areas will often influence the type of day that we get, the day type. So here we see we had a very large balance area, right? And then we had gapped down aggressively, tried pushing it below the extreme of the balance area, had momentarily rejected that, and now today, which we're looking at this day, are gapping up and pushing higher right into the previous high volume node of the balance area. Alright, so let's now zoom into this day. Okay, here's the day. So this day we gap up, and it looks like we're pushing higher right off the open. Alright, but we're pushing higher right into a previous high volume node, the previous key reference area. Now, given that context, we're not flying blind on this day. We're not just opening up and going, I wonder what prices will do today, and then by the end of the day label it a certain day. We're looking forward and anticipating. We know that the likelihood is that we're going to meet resistance at this previous balance area, previous high volume node, and there's going to be a reaction, and we try to gauge that reaction. And so here was the first reaction. We pushed down, right? And then we ended up balancing sideways. So at this point, we watch this balance area, and if we get a sustainable upside breakout, we think, okay, maybe price is going to try to test this previous key reference area once again. But if we can't, right? If we can't break out, we can't sustain it, and we break out to the downside, we have to be logically thinking that given the previous large key reference area, there's a decent chance that we're going to get a bigger reaction than just this. And since there's still time left in the day, there could be a bigger afternoon down push that would fit into the bigger context of getting a large reaction down off of the big key reference area. So what ended up happening here is that here was the balance area. Let me just draw one in right away so you can see it better, right? So here was the balance area, intraday. We tried here breaking out to the upside. We attempted an upside breakout, but quickly sellers came back in and rejected it. And not only did they reject it, they went right back through all of the high volume node. They just took it straight down. It didn't even end up serving as support. This was telling us, okay, sellers now in the afternoon, after taking this midday break, in which there was very little volume transacted vertically, now they're back in control. This previous reaction down could be reinstating itself. The fact that we rejected this upside breakout of this balance told us that the likelihood of moving lower is high, especially since we moved through it so swiftly, right? All these longs are now going to be trapped, they're going to need to sell, and this is likely going to push it lower. So given this whole context, and once we do start pushing lower, we can start feeling pretty confident that this was the high of the day since it came at the key reference area, and since now the intraday market action is confirming the larger context. Now, we couldn't project that the price would move down this much. This was a pretty big down move. But you can never predict that kind of thing in the market. You just have to understand the general bias and what likely day type you could have. Right? So if you were looking at this day in isolation, right when it gapped up and it's pushing higher, or you might have thought, oh, this is so bullish, let me buy. Well, looking at the bigger context, you had a better idea of the likely day type that was to occur, especially when you combine it with the intraday action of what happened here after this push down. So that's how you start putting things more and more into context, building on things. Nothing is in isolation, not even day types. They're affected by context, and they're affected by key reference areas. Now, when you're looking at a bigger key reference area like the one we were looking at, let me zoom back out. All right, here's the day. You don't necessarily know if the major reaction down is going to happen that specific day. It might have came up here and just balanced this whole day, and then the next day it tanked down. But you're watching intraday action to kind of tell you what's the likelihood of happening. If this whole day was just opened up and just kind of started going sideways on very low volume, no real reaction, then it may have been that was going to be a balancing day, and then some following days were going to cause the reaction downwards. But at the very least, under most normal circumstances, you probably would not have been fooled that this initial push higher was something strong to be getting long on. And the last thing I want to talk about in terms of putting day types into context is how the current day type will also influence how heavily you weigh the key reference areas. So it works both ways. The key reference areas, the big ones, will influence what kind of day type you get, right? And the day type you're having, if you're seeing one that's already well established and then you're gauging what it's already likely to do based on some strong conviction, that's going to tell you which key reference areas are likely to hold and which are likely to break. And let me give you an example. Here we're taking a look at a day that gapped way higher, almost above the whole previous range of the previous day, right? And after a little balance, just shot up and started trending higher and higher and higher, right? So at this point in the day, by here, we could pretty much tell this was going to be a trend day. It was just directional conviction nonstop. And not only that, but it had taken out this high conviction down move relatively easily. It just bounced a bit here and then just shot right through it. So it's telling us that the market was strong, buyers were really in control, and by midday the likelihood was that this would be a full out uptrend day. Now, at the same time, we were reaching pretty important resistance right here. It was a significant high where the market had gapped down from and caused this whole down move. This was the launching point of that. So we were reaching this important resistance. Now, on most other days, if we were hitting this type of resistance, we could expect a pretty nice reaction down, and that could be the stopping point, right? But in this day, it was an uptrend day. The buyers were in full control. And like you know, when a trend is going, it's less likely to reverse than it is to continue. And so while we do pay attention to this key reference area, to this resistance, we don't weight it as heavily as usual, all things being equal from the bigger context, because of the strengths of the current day that's going right into it. So maybe if you were trading it, you would step in for a short at the larger resistance. I personally wouldn't. When it's an uptrend move like that, I don't fade it. I don't take a short side trade when the trend is so strong to the upside. I would expect that after a bit of balance or a small reaction, this resistance is going to be taken out to the upside. Here, they took it out without even balancing, just straight right on, bounced above it, and then kept going higher. All right? So understanding the day type in this instance that was already at play, that already kind of confirmed and proved itself, allowed us to sidestep a mistake in thinking just because there was resistance here that we couldn't break through it. This day was too powerful and it was likely to break through it. Now contrast that with a day like this that happened right after the big trend day. Remember we said that after most trend days, we kind of get balance, which is what happened here. We just had a nice balancing day that did nothing right after this trend day, right? Well, given this balancing day, given the market action, how it was just going sideways, there was no real conviction, it would be up, it would be down, up, down, right? If now, on this type of day, there was some strong resistance above, let's say there was just another resistance level right above this one. On this day, if this shot right up into it, then we would be expecting a reaction. This day was showing little conviction. It wasn't like this directional conviction day. So based on this day type, if it were to put in an upside extension of the first hour range, we would probably expect that extension to end at the major resistance, right? Because we know this day is not a high conviction day, and we know that it's not going to take much to stop the buyers with a wall of sellers. Whereas on this day, there was so much buyers it would have taken a lot to stop them. So you understand? You look at the day type and you gauge what's the likelihood of certain key reference areas holding or not. The day type helps you do that. Now you're not going to always be right. Sometimes you're thinking it's going to be a balanced day and it just breaks out into a trend. Things will happen. This isn't an exact science and it's not simple and straightforward. Like we always say, it's complex and it takes contextual understanding and experience. But all these things, all these principles will help you trade it better. While most traders are sitting there looking at simple chart patterns and memorizing setups mindlessly, you're actually looking at things in context. You're looking at the day type, you're putting it in context, you're weighing certain key reference areas more or less heavily based on the day type. And at the same time, you're recognizing if a key reference area is strong enough and if the overall context supports it, that itself could change the whole character of a day. That itself could help determine the day type. So keep all these things in mind as we move forward and never forget to always look at things in context no matter what it is.